Roundup traders, it's the 6th of March. It's Monday. And what a fun Monday it is as these markets are looking to do something a lot different than what we saw the end of last week. What am I talking about? Well, I'll tell you. Just make sure you take responsibility for the outcome. You guys know the drill. So, in a quick market analysis, one day can make quite a difference because my outlook on these markets going into the weekend was, whoa, that might have been a pretty good pullback. We're bouncing off some key levels and looks like we are surging higher. I just ran into a little bit of a wall. Now, it is early. It is very difficult to do these on Mondays because the fact it is only one day. But boy, let's get a look at this daily news here. Last week's surge comes to an abrupt halt today. And what I mean by abrupt, guys, is take a look at this intraday SPY. Darren and Rob over the weekend talked about volatility coming into these markets based on the situations or just basically on the area or the ranges that these markets are in, to where we're going to see a lot of push and pull that actually might not go anywhere. And we shot up like we were going to follow through from Friday's close and just turned right around and came back to close flat. So an abrupt halt today at some very key levels. It's just one day. Let's see what happens tomorrow. Bond yields and some economic news are giving mixed signals. We've been talking about this for months. We're seeing something that's a little bit hot, something that's a little bit light, and everything that's hot is inflationary. It's good for the economy, but it is bad for inflation. So you've got this argument between the bulls and the bears, and you could go down the list, and each side, the bull and the bear, would have a very good argument of what they're seeing in these numbers, which creates a lot of adversity in where these markets can't really go anywhere. So how do we finish overall? Flat. We just stopped. We had a pretty good surge on Thursday, pretty good surge on Friday. I'll show you the chart here in a second, but we didn't go anywhere today. We were actually up almost 180 points on the Dow at one point and closed all the way down just about up 40, so 0.12 on the Dow. The SPY absolutely flat, NASDAQ slightly lower, Russell, oil, gold coming in pretty much on par. Oil did poke its head up a little bit, up 1%, closed about 80, just over 80, I think it's 80.50 is where that closed. The advanced decline line, 67% advancers, 29% decliners. So this was just a corrective move throughout the day. Let's take a look at the above and below 50-day moving average. Why we're here, 49% below, 51% above. So we got about a 50-50 line. But it really wasn't anything past the fact that we just had a pretty ugly looking week last week. Or I should say, not only last week, but last week and the week before. And what ended up happening is the markets just kind of retraced from it. This is what I've been focusing on over the last little bit, was just this area here. But when it came to the end of last week, and for me, I've been waiting for a little bit of a corrective action below that 50-day moving average, which we did get. But what caught me off guard was just this little bit of a blip up over the last couple of days of last week. That Thursday, Friday, just really kind of surged the upside. Now, there wasn't any big difference in the participation when it comes to volume-wise, but it did make me scratch my head of thinking that this might be something a little bit more significant than a bear rally just on where this had landed. Now, what's got me scratching my head and the thing that I'm focusing on probably the most is today's candle. This doji candle, or even a shooting star doji candle, happened to be right at that 20-day moving average, which coincides with this type of descending pattern that we've been seeing in the markets. Now, could it be an overall bullish flag pattern, or is this something that we're going to be a little bit more ominous with if we come back and try to retest that 390 low? So we talked about this over the weekend of the kind of a split here. We're at this area where the markets could shoot up higher, stay above that 400 mark, or 410 is kind of where it would probably be a little bit more optimistic and continue higher, or is this thing going to roll over, retest its support level that it set on Thursday and break below that 390 level. So we're still in the middle of I'm not sure where to go. Once again, folks, it is difficult to do these on Mondays, but for now, just based on the charts, I have to be a little bit glass half empty, right? A little bit more ominous. Taking a look at the Qs, it's the exact same pattern. You could see how we had what I'm talking about, what I was focusing on over the previous week and in almost the end of last week, but then out of nowhere, we had this little bit of a shot up on Thursday and Friday. We have that same ominous looking candlestick today. The Qs did basically the same behavior as the SPY did, One day doesn't make anything, but boy, it sure did put the brakes on to what Thursday and Friday surged. So we'll see. We'll see. Are we going to come back up and retest this 310 level? Or are we going to roll back over and get back to this, in this case, the 290 level with the Qs? Now, what's difficult about this, guys, you can see that we're right in between this. We have a lot to go before we get up to here, and we have quite a bit to go before we get to the downside. Now, what are we looking for? Well, we got to have some sort of stimulant. We got to have some sort of catalyst that's going to either push these markets up or down. And so far, we haven't got any participation by the bears at all, as even with today's fall off into the close, the volatility index managed to stay below 20. It just is not, there's just no fear out there at all. Now, as you might think, when it comes to a flat market, you're going to get a very mixed bag of goods. And Apple had an amazing few days, Thursday, Friday, and even today, massive surge to the upside. Microsoft, Google, some of these things are really participating in an almost questionable sort of kind of the pattern that is projecting out there. Kind of makes you scratch your head, because is it oversold, or is this speculative purchasing, or a little bit of both? I don't know. But we've got this basically kind of a brown looking heat map. Individual stocks held on and a lot didn't. I can't make heads or tails of it right now. You have to actually go through and individually chart. So let's get to that. So overall, I'm a -1. We were flat out zeros over the weekend, with 0 on the weekly outlook and 0 on the monthly outlook. I'm going to stick with that monthly outlook of 0 just because we are still above a support level that we set last week, and I'm talking about this one right here, folks. However, today's candlestick and just the way that we got up to today's candlestick, those 2 days gap, a big surge to the upside, gap up, surge higher, there was no presence of bears. There was no push to the downside. So I have to be a little bit pessimistic in the extension that we've seen over the last couple of days. But the overall pattern, my monthly outlook has to say 0, because we are above that 50-day moving average. Let me go ahead and draw a little illustration on the small chart here. And we have this going on when it comes to those lows. So it's a little bit difficult to project now. Take a look what I have here. Below the 20 is red, above is the 50 is green, and the slope is yellow. So I am pretty much flat across the board when it comes to my simple top-down approach. Let's take a look at a couple of trades. I couldn't find much. When you get markets that are up as aggressive as they have been Thursday into Friday, and you get one that just fell apart today, all your bulls go backwards and all your bears go backwards. So there wasn't much out there. But a couple things did hang in there. JP Morgan was one of them. And it's nothing that I wanted to buy today, but what I did like about it, it is holding on to this really cool ascending triangle pattern. So if the markets decide to go north, they decide to hold on here and break to the upside, I'd be comfortable getting into JPM here above 45 with some sort of a diagonal spread. I'll go ahead and tell you folks, I'm not doing much of anything when it comes to a locked-in targeting system. I'm good for 1 week, 2 weeks, even with a staggered expiration system. It would be very difficult for me to go with a 3-week vertical spread here. I just don't have the confidence, or I should say the confidence in myself. I was going to say confidence in the markets, but the confidence in myself to nail that 3-week outlook, because the way these markets are behaving, it's just going to be super churny and super volatile until, and I hate to say this, but until they decide which way they really want to go. Tesla is something that's been on our sideways radar for a while. Now, this one just came out with some bad news. I guess it would be bad news. They're lowering the cost of some of their cars, worried about future growth. We already know what Tesla's been up to lately. But it did create a little bit of an area, and I shouldn't say a little bit of an area. This is 40 points. I did like it pinned here at 200 for a sideways trade. This gap down, I thought, oh boy, it's the end of it. But it did come back up to test this 200. Now, that doesn't mean it's going to stay there, because if these markets do roll over, considering where Tesla is with their news, maybe this will come back and retest this 180 level. So I would be a little bit more comfortable. Let me go ahead and erase this and redraw it. Moving this sideways trade for you guys that aren't into it yet, somewhere between the 200 and the 180 level. This would be a little bit better of a target for me if I wanted to play sideways to slightly lower on Tesla. Got a couple of bears to look at. This is CNC. CNC, I love the fact that it actually confirmed a breakdown to the downside here. where it confirmed last week. And then after that big market surge to the upside, this didn't participate. But today's little shooting star doji did touch that 70. So a nice confirmation below that 68 or lower could be something to take advantage of with a continuation play. However, folks, not a vertical guy here. I'd rather do a straight put, something that I could get in and out of or manage and not have to worry about if I got the right timing. These markets are going to be way too volatile, in my opinion, for timing. Waste management, I zoomed in a little bit more on this because this was in a consolidation area for quite a while here, and it looks like it's about ready to spill. Big head fake on Friday, and folks, I was watching this too. My entry is somewhere down in this, just above the 148 level, but I was very excited, and it just didn't follow through. Today, an inside day. This is a nothing wash, is what I like to call this. So you open, you close. The next day, your close and open are equal to the previous day. It's just churning, and churning is super frustrating if you've got a directional position. So how do you get away from that? Diagonals, some sort of like a targeted butterfly, things of that nature. But I'm still thinking a rollover to this point and maybe a break to the downside. Now, if the markets do indeed roll over, this is a volatile enough stock that will probably be at this 148 by the time I even get to looking at it. So something to keep in mind. And the last one is KMB. This is one I talked about a week ago, and I still like it. The idea was, hey, let's see if this can break this descending triangle pattern, and it did. This is my confirmation mark. This is where I was very bearish on it. It did participate in the move that we saw Thursday and Friday, but it looks like it might be floating back down. For you guys that are in this with a diagonal, you're fine. For those people who want to get into this as it breaks 125, well, be my guest. Just be patient. See if it can't get back down there. All right, so that's what I got for a Monday. A lot of the stuff I carry over from week to week, especially from my Wednesday class. Thursday and Friday are looking more like a strong bear bounce, and it's just after today. It's so funny because over the weekend I was like, oh geez, here comes this new surge that's going to bust out above these resistance levels. But today literally just slammed the brakes, and how it did it was very interesting because it just rolled right over midday and sold all the way down to flat. I need to see selling, so I can't be full bear yet, although I'll give you my bias, I am. But that's why we trade the markets in front of us and not our opinions. So the economic-wise, I went through it, and it's really kind of weak. It's really super light, but it's intense. And the reason being is because Powell's addressing the Senate. People are going to be hanging on every single word based on how the bonds are just showing fear. The 10-year just shot up to 4. It's closed slightly below 4 today. But the way the bonds are behaving in the inverted yield curve, it's just panic. But the volatility index isn't, and the markets aren't. They're continuing to go higher. And so we also have the ADP employment number. Another thing to think about, folks, is the complacency of the trader. And this is where I come when it comes to some of these economic numbers, when it comes to the bull versus the bear. Bulls have an argument of the economy is strong, manufacturing is strong, services went up. We're holding on to our jobs that are actually paying higher. That's great for the economy holding on, but that's horrible because all of those relate to higher prices. Higher wages equal higher prices. More demand, more spending, increasing costs. So it's this double-edged sword, and so I see an argument in both directions. Check your potential trades for earnings. I went through and saw a couple, and it is early yet. Next week we'll probably get, or a little bit later in the week, we'll probably get deeper into it. But always check because we're still in earnings season, and we'll just have to go from there. It is a Monday. Couple things to look at, but today's action did show that the brakes are on at least a hesitation. Now, Powell will speak tomorrow and into Wednesday, and we'll see how the markets react to that. All right, folks, thanks for joining me. We'll talk to you next time. Bye, everyone.